Good afternoon, everybody. It is 1 p.m. Central Standard Time, 1300 if you like the military time, on this wonderful Thursday. It is Thursday. Yeah, Thursday, the 26th of July, 2018. And let's go ahead and get started with our look at these crypto markets. So, what we've got going on. Wait a minute. It says the live stream is offline for some reason. Make sure that, it's always something new when you're doing something new. New problems. Okay, I think we're good now, maybe. All right. Okay, yes. Take a look at Bitcoin real quick. So we had a little bit of a... the hell was that? Oh, it was my cat. Oh my gosh. Cat is snoring. On Monday and Tuesday, we discussed this rise in Bitcoin as it got up to that 8,400 zone. We talked about the possibility that we would observe a drop in price, and that is pretty much what we got going on there. Okay. Oh, now I see it. I was on the wrong link. Okay. And all we've really done so far is we've just we've been forming what's called a pennant, and pennants and flags and all of those things are short-term or half masts. Those are all short-term trade patterns, and one of the most important identification features of flags and pennants is that is the steep trend preceding that pattern, and that doesn't matter what time frame it's on. If it's on monthly, weekly, daily chart. I mean, you're most frequently going to see them on daily and faster time frames. But so that's one of the most important features is the steep trend, and the price target for a lot of these patterns is calculated by taking the distance from the beginning of the trend, not necessarily the beginning of the entire wave of that trend, and then to the first reversal in the pattern by adding it to the breakout price. So that's called the measured rule. If any of you have taken any formal market technical analysis training, that is one of the first things you learn about in forecasting off of price patterns. What is interesting about price patterns is real quick, just to kind of go on the nerd mode for a second, is that the literature has changed, and if you've ever heard of the EMH or the random walk theory or the efficient market hypothesis, that is kind of the inverse of what technical analysts do in their trading patterns. Okay, so a lot of this is a lot of academics and investors believe that patterns do not exist. They believe that either that the price action is completely random or at least it's indecipherable. The concept of randomness is now being questioned. Now, as a Gann trader, I don't believe in randomness in the markets. That's not part of the theory that I apply to the market. It's just not part of that. So the randomness issue does not exist as a Gann trader. So, but what is interesting is that is a old school form of technical analysis. One of the original forms of technical analysis was Gann's work. But now, as we learn more about human behavior and behavioral finance, and we understand the limitations of computing so far, we understand that that whole random walk theory and the efficient market hypothesis is probably not correct. Okay, what has been the norm in finance and trading for over a century and a half is not a thing anymore. The problem with patterns, folks, when you're trading a flag or a pennant or head and shoulder or a cup and handle or any Gartley pattern, is that as humans we have a tendency to want patterns in our data and other information. We want to see these patterns, and sometimes we block out the other information that would kind of void them, because humans are fickle, and yeah, I mean we're also poor humans are really poor statisticians as well. We tend to put more weight on recent history than what is statistically warranted. So we could have, what I'm saying is you could have 5 head and shoulder patterns. Well, that's not a good example because that one's actually really like the most profitable pattern. You could have a series of wins on flags and pennants and kind of get into the tunnel vision of time and place a lot of weight on the success of a pennant or a flag based solely on your most recent trading history. So in technical analysis, the analysis of patterns, we need to guard against market lore and that belief in patterns being always correct, because they're not. So, and we also need to understand that as humans and in trading, it's very dangerous to our psyche. We get dopamine high from a big win or from watching a win run. And depending on what the conditions were on why we took the trade, we can train ourselves to want to get that response again. And so we'll be looking only for the patterns and the setups that gave us that pleasure and that win. And that is why trading is so difficult, is you have to have such a knowledge of self and such an understanding of your own weaknesses and fallibilities that sometimes for some people it takes the joy out of trading. You don't get that high anymore. But what's more important, making money or getting a superficial high? That's actually a natural high, but you know what I mean. You really have to train yourself to not get it's one thing to learn to not get upset about a loss. It's another thing to tell yourself don't get excited when you get a win. Okay, that's just a behavioral thing you have to do. Anyways, looking at the market. Okay, so looking at a 4-hour chart of Bitcoin. If you're an Elliotician, I'm not a huge Elliott fanatic. A lot of people are very dogmatic about their application of Elliott, but if we are Ellioticians, we have a pretty, rough looking, and it's a 5-step motive wave, impulse motive wave, higher here, and we could say that we are into our ABC correction, which would play out such as probably down to there. That is a very probable, a very possible move. Doesn't even have to go that far. Regardless, though, what we are forming, even though I talked about patterns, is we are forming a pennant. Pennant is also a triangle. And you probably, if you've been trading for any length of time, you probably have seen these. You're probably aware of them. You probably know them. You probably have tried to trade them before. but there's behaviors related to the shapes of patterns. You've got your ascending triangles, your descending triangles, and then your symmetrical triangles. Now, symmetrical does not mean perfectly symmetrical. Okay, but what we really have here in a pennant is we have a symmetrical triangle. Okay, and or they call it like a coil, like price. I use that phrase a lot. That it's coiling. We're ping ponging around to tighter. So one of the behaviors of this pattern is that volume usually trends downward during the pattern formation. And so we have seen that happen here. We've seen a decrease in that volume. And that happens 86% of the time when you're forming an asymmetrical triangle. And the breakout is usually upward. So 54% of the time. Basically, you have a 50-50 chance in a ranging market for this to move higher. I do not know or remember what the ratio is if you are in an uptrend, but you can bet that the breakout of a pennant in a new or an established trend is to the top side. Okay, this is an asymmetrical triangle in a bullish pennant. And hello, Mohammed, how are you doing? And so that is what we are observing right now with the price action. Okay, breakouts, they commonly occur between 73% and 75% of the length of the triangle from the base to the cradle. So when we're talking about a triangle setup, the base is at the beginning and then the cradle's up here. We're actually getting a pretty constricted triangle here. And if we're looking at it on the 1 hour, we have a pretty flat composite index here, and we have a oversold stochastic RSI. On the 4 hour, we have neutral to sloping down composite index, and we're sloping down in the oversold condition on the 4 hour, and we have volume declining here. So where is the buy entry here if you wanted to go long on this? Well, we want to be aware of a couple things. How is the slope of this? Is this still technically in a parabolic rise? Maybe, maybe not. We'll see. However, it has consolidated since this drive here. So, and we've had 2 days, two to 2.5 days of consolidation within that zone. So what we want to look for is, do we have any other kind of indication that we'd have some difficulty moving higher? That's one thing we want to take a look at. So when I'm looking at this market geometry, it makes sense that we are consolidating over here, because this 5x1 line just acts as a natural resistance zone. It's telling us that the momentum has been fast. The price has been moving 5 times as fast recently than it has in price than it has in time. So it makes sense that we would wait here. The fact that we have not had a staunch sell-off is a pretty good sign that we should be moving higher. I'd be surprised if we didn't start another leg up by by tonight, by Central Standard Time. That would be kind of different. If we look at it from this perspective, where are you at? Bitcoin. What are we trading at? I hate the end of day data on Optima. Gosh, fantastic software, terrible data service for crypto. Okay, 8,200. Yeah, it's really not much different than this zone here. So, yeah, it's not a lot of resistance there. Tomorrow, though, what is tomorrow? Ooh, moon phase time. 27th, big time moon phase time. So Bitcoin, definitely, and it's got an apogee here. We're just a few days, I guess, 10 days removed from the sun opposite Pluto aspect. So keep that in mind. But certainly, if I'm going to be a buyer here, I want to wait for the breakout. I don't want to participate early in it. So my order would be resting at the 83.36. That would put us in a pretty good zone. But, in the starting of the video, we're talking about the Ichimoku system and trading that. And that's what I want to kind of convert over to now. So, is anybody here unfamiliar with the Ichimoku system? Is anybody here familiar with it, but do you know the three other components to the Ichimoku system? The wave principle. Goichi Hosada, he's the gentleman who created this system. It's actually really, really cool. I wish somebody would write a book on it, because Goichi Hosada, he didn't. I mean, this is well before computers, so he had a whole bunch of poor intern students that he had analyze the rice markets and markets in Japan. This was just before World War II, and I don't think he published it till 50 something, maybe. I don't know, but the Ichimoku system is a collection of a lot of analysis into one system. Now it's an indicator in a lot of chart software, but it's really a trading system. It has its own set of rules. The Ichimoku system has its own wave principle, like Elliott does. It's very possible that Goichi Hosada, I don't even know if I pronounce the guy's name right, but it's unknown if he actually knew Elliott. But there's also some market geometry in it. There's also a price projection principle and a time principle. And if anybody is familiar with Tom DeMark's sequential indicator, where it counts the number of candlesticks and then has a reversal on like the 9 or 13, Goichi Hosada had that before too. So it's really interesting is the Ichimoku system is a form of Eastern analysis, and it came out at a time when very possibly the original market technicians in the West had no communication with Goichi Hosada. They were not collaborating, but they all came to the same. It's the same approach, but through a different lens. And I know when I've read literature on the Ichimoku system and how it works and when it's used, it is a more dynamic form of technical analysis. It is not a very static form of trading. There's a lot more leeway involved. It's a lot more. It's got a lot more flow. Like, it's more flexible. This style of trading. Whereas in Western analysis, we've used things like Elliott, Gann, Gartley, Williams, any of those dudes, or Brown, dudes and gal. Really a lot of the technical analysis in the West is very, very definitive. It's very static. It's got clear, concise rules, and it's more of like a style and a preference. But the genius of the Ichimoku system is that it is meant to provide you a good interpretation of what is going on in the market by just having to look at it at a glance. And that is literally, I believe, what Ichimoku means, is the market at a glance, or market at equilibrium. And there we go. Do a quick little rundown of what the Ichimoku system is. You have really 4 components to it. I know there's actually 6 of the indicators, but you have the first one you have is this blue line is called the conversion line, or this is the Tenkan-sen. That is the Japanese name for it, the Tenkan-sen, this signal line. And then you have the Kijun-sen. This is the baseline. The Kijun-sen, now here's where we get into kind of the cool stuff. The Kijun-sen is almost always at a 50% Fibonacci level of a swing. Okay, the baseline is one of the cool aspects of the Ichimoku system. It kind of tells you where it's all, and it's like an ATR. Okay, so when you get significant price expansion away from the baseline, you can expect price to retrace down to it some or all the way. Think of price being attached to the to the baseline. Think of price being attached to it by like a rubber band, so that when we observe prices moving a long ways away from it, we should expect prices to want to come back to it either in time or price. So if we were to have prices return to it in price, we would see it move down fast, or in time we would see it just drift over. So the further extended you get from the baseline, the more probabilities you're going to have of a pullback or a throwback. And if we look at, you can do your own analysis, but whatever time frame you like to trade on, or whatever time frame you like to initiate trades on, like if it's the 4 hour, go through, like, get yourself a tablet of paper or use Excel and write down what are the amount of swing, how many pips or points, or what amount does price travel away from the baseline before it wants to come down back to it, okay? So you just kind of look for a lot of these spikes in price away from the baseline and see, how far does price go before it wants to come back to it, okay? And once you get an average of that, you can get in a scalp, or you can anticipate a re-entry somewhere, but more probably than anything, you can determine when you shouldn't probably re-enter a trade, okay? So that's the conversion line and the baseline, and they are moving averages, but they're not normal moving averages. They are simple moving averages, but they take the average of the high and the low over a period as opposed to just the close. So that's why you get these kind of these flattened looking averages. And excuse me. Then the other component we have is the cloud, or the Kumo, and that's probably what the Ichimoku system is most well known for, is this funky blob and blobs that end up on your screen. And the cloud, all that is, it's the conversion line of the baseline, the Tenkan-sen and the Kijun-sen. Oops. Oh my gosh. It is these lines projected forward 26 periods. Okay? And then it's got a slight what am I saying? Displacement. Okay, so it's displaced 26 periods and then up just a tiny bit. But that is telling us, past price action in the future is kind of telling us where price is at now relative to the past and in the future, actually just relative to the past. So that is how the cloud is formed, and then some software will color it red or green, or sometimes they put diagonal lines in it. But whenever the conversion line is above the baseline, then we see that is painted green. There's actually two lines in here. There's called the Senko spans, Senko span A and B, or they call them lead 1, lead 2. And I never use those on here. I just want to see the cloud. That's all I really want to see. That's up to you, though. All right, and then the final component of how this is made up is the lagging span. This is I think this is what makes the system so awesome. And the lagging span is just the current price action moved back 52 periods. So if we can see a better view of it by, if we just did a line chart, you can see that the current price action, that is all the lagging span is. It's just moved backwards, okay? And this is like a signal line. This is the lagging span is what you want to look at probably more than anything, because it is what is used to determine whether or not you are getting out of a trade or whether you're getting in a trade. Okay? And the Ichimoku system is like most things, it's most effective in a trending market. Like everything else, things really suck to trade in a range. Some people like trading in ranges. I don't know who that is, but range trading sucks. That's just how it is. That's why you want proof that range trading sucks. Not even institutions like to trade in ranges. That's why you get such significant drop-offs in congestion zones. Pro traders and big money, they don't like to trade in those congestion zones. Okay, let's bring this all back to normal. Let's bring our candlesticks back up. Okay, so how do you trade this? What do you look for? What is this all about? There's various rules. There's various strategies that have been written on the Ichimoku system, but essentially how you trade it or what you want to do with it is you want to never trade. This is probably what is so great about the Ichimoku system, is that more than anything, it tells you when not to trade. If price is inside the cloud, you don't trade. Very simple. You don't trade. Because when price is inside of the cloud, that tells us that, and it's trading inside of it, that tells us that there's a change happening in the market soon, or that the market is consolidating. Okay? So if price is in here, we just don't trade. There's another name for this. Goichi Hasada this was just saying we don't trade in these consolidation zones. It wasn't until like 2001 that we had something else to call this, and that's a squeeze, like a Bollinger Band squeeze. English. Bollinger Band squeeze. And when John Bollinger came out with these, what we learned about Bollinger Bands is it's a volatility indicator. And so we see, prices, they were expanding in a range, and now we've tightened up a little bit. So we see that the bands constrict, showing us that volatility has lessened, and we're into these squeeze zones. And Bollinger Bands are actually kind of, they're pretty effective to use in the Ichimoku system. You can use it as another confirmation tool. But really, when we're seeing prices trading inside the cloud and flat, that's telling us that we are entering a squeeze, and that we can anticipate a breakout to the top, breakout higher, or a breakout lower. Okay. And I'm just looking over at my other screens here, watching. Okay. Trying to see if my Binance trades triggered. I don't think they did. That's all right. Okay. Cool. Okay. Now, if we really want to get into it a little deeper now, we have that one rule: don't trade when you're inside the cloud. Then the question is, where do you go long or where do you go short? So let's look at Ethereum's chart. So breakout trading is hands down easily probably one of the most effective ways to make money. Breakout trading is very low risk. Breakout trading is you just have to be patient. And the Ichimoku system is a fantastic way to look for breakout trades. Okay? And how we do that, so let's say we want to do a short trade. Okay, let's say we're trading Ethereum on Kraken and we want to short it. So we see price is trading inside the cloud here. Actually, let's bring the market replay up, and let's pretend that we're trading this live, even though we already know what happened. Okay, and we see prices moving, ping pong, ping pong. We see we're in the cloud, and now price is outside the cloud. Now, some people and some educators, they will trade whenever price closes above or below the cloud. They will take a trade in that direction. That is not a good thing, and you'll see why. So we're trading above the cloud. Sloppy trade. Why don't we trade above the cloud when candlesticks break? Because the lagging span is what we're waiting for, okay? The lagging span is 99% of the time going to be the final thing we observe for signaling a trade. So for going short, we need price to be below the cloud, but then we also need to have the lagging span below cloud and the price and candlesticks, okay? It needs to be outside of the candlesticks, below it, and it needs to be below the cloud. And, oh man, I forget I was trying to find it. I had a link a long time ago on the percentage based on hourly time frames. It was for gold, but I think that can apply to cryptos. It's the next closest thing. But when the lagging span meets the condition for going long or short, like on a 4-hour or a daily chart, you have a really, really high probability of making bank on it. So if I hit the play button now, we can see that signal that was generated played out pretty nicely. Okay? Now, as we're moving lower, and we had some pullbacks happening here, we can see that price, when it wants to pull back, where does it find resistance against? The baseline, the conversion line, the blue line, the faster average, the blue line, the conversion line, that is, you can use it as a source of resistance or support, but really, you're going to find price respects the baseline more. So, we see it when we get towards that baseline, we see price action wanting to stay away from it. We hit play again. And we can just see that this is a continuing theme here. And then we can also see that the cloud itself will act as a source of support and resistance. Okay, now we are trading inside here. Okay, we're inside the cloud. We're facing resistance up against the top of the cloud. We kind of slid outside of it. When the baseline and the conversion line cross, that is a warning sign that the trend may be changing. Actually, the first warning sign, there's a couple of ways to take profit. That is when you see the lagging span trading inside the price action, or you get a cross of the conversion line and the baseline. That's where you probably want to cover your short. But if we hit the play button, we don't have all the conditions met for taking a long trade yet. So if we're taking a long trade, it's just like taking a short trade. What we're looking for is price to be above the cloud. The cloud ahead has to be green. I didn't mention that before, sorry. And more importantly, the lagging span needs to be above the cloud and price. So we still don't have a long trade signal. We do now, though. When the candlestick finally closes above the 4-hour cloud, and we see the lagging span above the 4-hour cloud, price and lagging span are both above the 4-hour cloud, and the cloud ahead is green, that is the long trade signal. Does it always play out? No. Maybe that wasn't such a good example. But you get what I mean. That brings me to my next point, is that MTF, multi-timeframe analysis with the Ichimoku system is really suggested. So, oh man, I forget the author's name. Ellie. She wrote and she put down some preferences. So, like, if you want to trade off of a 1-hour chart, you use the daily chart and the 4-hour chart to help you base your trade on the 1-hour Ichimoku system. But yeah, we'll just get rid of that for now. Okay, so when I'm looking at Ethereum on the 4-hour chart, what do I see happening here? I see a pretty congested trade. Okay. Even on the 4-hour chart, I'm getting conditions met where I could take long trades on the 4-hour and conditions met for taking short trades, but I'm not really getting a whole lot of you know, other. I'm not getting continuance of the price action. So, I gotta revert back, or just have 3 different time frames up. Where are you at? I want the other way. Let's work. So I'll keep the 4-hour down here. I'll make this the daily, and I'll make that the 4-hour rather, and this the 1-hour. Oops. And so on the daily, what is the daily telling me? Well, the daily's telling me that I'm going to eventually have this twist happen, this TK twist, the Kumo twist, where the conversion line's above the baseline on the daily, and I should see this turn green eventually, and that this is telling us that the trend is about to change. Has a good probability of changing. The fact that we're not getting strong selling off the bottom of this cloud is a good indication that the downtrend has been weakening. And you don't really need the Ichimoku system to tell you that. That's apparent, many ways. Then I take a look over at the 4-hour chart. I see the same story, that we are in this congestion zone. And then the 1-hour is really not any more help. But the 1-hour is telling us that we could take a long trade here, because price is above the cloud is green, the lagging span's above the cloud. It came out of trading against the price action, so we could place a trade and have it be above the conversion line here, so maybe at the 480.54. And I always write signals like that. That's just saying having a long trade ready to take at 480.54, and it's based off of the 1-hour Ichimoku system. And I can always go reference that back and see why did I do that. Okay. All right. Any questions on this so far? Any questions? If you don't know what's going on, you don't ask a question. That's dumber than asking a question you think is dumb. Because there's no stupid questions in technical analysis. All right, there are, but with this kind of stuff, there isn't. No questions? Okay, I'll just keep going. Taking it in. I'll say this, that if you have tried trading and you've gone from system to system, to indicator, book to book, if you have not been able to be profitable yet, the Ichimoku system is something that I promise you learn about it and you trade it how you should, it will make you money. I'm saying that from personal experience, because how I learned to become a profitable trader is with the Ichimoku system. And the Ichimoku system teaches you a lot of stuff that you don't even realize you're learning about. You're learning about dynamic support and resistance zones. You're learning about squeezes. You're learning that moving average crossover systems are stupid. You're learning about the effective way to do breakout trades. You're learning about multi time frame analysis. You're learning about ATRs. You're learning about where proper stops and profit targets are. Regarding where you would put a stop, the Ichimoku system kind of does that for us, where, where's your stop here? It's a little bit below the cloud. And one thing I don't do for people, I will give a signal on whether it's a good long or short trade, but I don't tell people where to put their stops or where to take profit. I don't tell people that for two reasons. One, people never follow that anyways. They will move their stops or they'll move their profit targets. And two, that is a form of self-discipline that people need to do on their own. But learning where to take an entry, if you can get an entry and manage a trade into profitability or manage a trade into having the stop hit without having to move it, that's what an individual trader needs to learn how to do. Let's see what else here. Where was I? I gotta find it here. Looking on my other screen for this. Don't see it. So that is on Ethereum. Let's look at another coin. Let's look at Bitcoin on multi-timeframe analysis. So Bitcoin on the hourly is looking pretty sexy for a breakout trade. Bitcoin on the daily is going to be pretty sexy on the daily, and Bitcoin on the 4 hours still looking pretty good. So besides certain individuals, is there an institution that uses financial astrology as its base system? Oh yes, there is. And let me pull up the Have you ever heard of Jim Simons? Watch this TED Talk. This guy's a mathematician. And somewhere near the last fourth of this video, okay, he has probably the world's most successful hedge fund. All right? And he uses stuff like topographical geometry, but his hedge fund also hires physicists and astronomers. I think if there's one thing that separates his hedge fund that he started in 1978, the fact that his hedge fund still exists from 1978 is a testament to the guy's intelligence and willingness to use anything to maximize profits for his. I think he also has the highest management fees, like 44% off the highs. I mean, that's it's a good video to watch. Renaissance is the hedge fund, and he's also a good philanthropist for mathematics. If there's a good teacher somewhere, high school math teacher, he pays them an extra $15,000 to keep them teaching. So yes, you know what? There we go. Financial astrology is a very, very cool way to look at things in the market and use them. So for Bitcoin, though, on the daily, we're pretty separated from the baseline here. At 7,300 is where it's at. It's not outside the cloud yet. So we definitely could observe some activity where we have some pausing in price action. On the 4-hour Ichimoku chart, we see we're getting kind of a rounded top here, and we're curling downwards. We've got to be aware of that. And then we look at the 1-hour chart. This is pretty consolidative, but both the 4-hour and the 1-hour have oversold conditions in their stochastic RSI. So this could just be setting up for another expansive move higher. And so the buy signal on the on the 4-hour, or sorry, the 1-hour Ichimoku system is above price above the cloud and the lagging span above the cloud, which we could probably say is at 8,300. That would be the condition, which is really kind of just the one I put out there earlier. Okay, I'm going to bring this back to one chart. Nice to see Bitcoin above and holding above the daily cloud. And let's look at Dash. Let's use the Ichimoku system with Dash. You want the Bitcoin pair or the dollar pair? I just gotta wait because the stream has some latency. Could do both. I'll go with the Dash dollar. Dash dollar really underperforming its dollar peers. So the Dash dollars sitting around here. And what am I trying to find where? So it's right below the cloud. It's you know, if you look at its trajectory, the trajectory from the cloud is down, and we're just kind of you know, hovering around here, not seeing a clear direction. I wouldn't anticipate a break to the downside. Certainly, that doesn't seem to be in the cards. So we'd have to look at a. Let's look at the 4-hour. 4-hour, we've got that pennant there. Let's look at the 1-hour. That's choppy as hell, isn't it? Well, the 1-hour at least kind of gives us a better. I mean, this is really kind of more like trading an asymmetrical triangle. Is you just have that trade above here. I mean, at the 256.90, that would definitely be a zone for the long entry. On the 4-hour, that would bring us over there. I mean, depending on your time frame and how you want to trade it, you could wait for the conditions to be met to go long on the 4-hour. Waiting on the daily, you might be waiting for a while, but certainly if you take the trade on the reason why I don't know if I take a long trade here at all is because on the 1-hour Ichimoku chart, you know, it would be a good entry if lagging span be above price over here, price be above the cloud at 252, but that also brings you right up against the top of the cloud here, and the bottom of the cloud on the 4-hour chart that acts as a normal resistance zone too. So I'm afraid you might be getting into some whipsaw activity here. So probably the safer option is to have that buy stop waiting at 270. You know, that's at the same time though, the whole market's catching quite a bit, and there's a lot of capital that has come in, so I don't see the issue with going long here, if you know what I mean. That's just one way to look at it. And just waiting even, yeah. But again, I want to bring us back to Bitcoin and just, recognize that it's has a very asymmetrical triangle pattern going on here, and we're currently trading inside of it, and we're ready to see some activity outside of it. I mean, really, it's going to break out one way or the other, and again, the highest probability is for it to move higher. And so, even on the hourly, just looking at this candlestick here, this is telling us that it may break out to the upside. Because the 1 hour chart is supportive for buying, and the 4 hour chart is also supportive for buying. All right. So yeah, trades yesterday that we went over, like wanted to go long on Steam. I did take a long trade on Steam yesterday. I did that last night or yesterday afternoon. This is my Binance trade history. I like to fool around with Binance a bit, but I had all these buys on Steam at the 177 area, 178 to 177 buy limit was hit, and then I sold it shortly after this afternoon actually. Yeah, I sold it at 1905, and then I bought back in for some Cardano because I like Cardano. But that was my trade yesterday that I took after we were talking. What else? Yeah, regarding macroeconomic events like what happened yesterday with Trump and Jean-Claude Juncker from the EU and the trade deal that did not affect cryptocurrencies much at all. There has been activity and moves in cryptocurrency. One of the only economic things that kind of moves cryptos beyond news related just to cryptocurrencies is GDP numbers. So GDP numbers come out tomorrow, and they're talking greater than 5% growth. That's freaking nuts. But that is that is a possibility. Unknown how that will affect cryptocurrencies. I think they're pretty, most part, immune to that kind of stuff. So, yeah, we'll have to watch how that plays out. Certainly, again, we're really just in the beginning of another bullish expansion phase. So, yeah, watch how these play out. And hope you guys had a good trade day yesterday. And I will see you all again at 1 o'clock p.m. tomorrow. Don't forget to like and subscribe. And if you have any questions tomorrow, please ask them, because it's Friday, and Fridays are kind of boring days for trading, especially in the U.S. afternoon. That pretty much everybody takes a break for the rest of the day. So trade well, trade safe. Talk to you tomorrow.